Welcome back. You are tuned in to Traders Nation. My pleasure to have with us here today Mark Antonowsky, Coldwell Banker, realtor. All right, my voice of reason. Mark, welcome to Traders Nation. How are you today?
Hey, thanks, Kurt. Hey, this is great, man. I really appreciate you bringing me on.
Yeah, Mark, for sure. My pleasure. Hey, so let's talk about this, Mark. So we've got some trends that are going on locally. Of course, you're here in Phoenix with me, but some national trends too. So let's talk about the local side. Buyers and sellers. Whose market is it right now? Is it the buyer's favor or the seller's favor?
It really depends on the price point. I think people are making less money, right?
Okay.
You've got the upper end it's really a buyer's market. You get above $1 million and you can come to Phoenix and work a pretty good deal.
Yeah.
But if you're looking under $400,000, you're going to find the memo is it's a seller's market, and if you want to find that house, you're probably going to pay up for it.
Is that right? All right, so what kind of appreciation have we seen in the local market here, at least in Phoenix? And does that, and I know every market is different across the United States, but let's talk about local first. Appreciation. Are we seeing values right? I know at some point during the big bust, right, everybody was vacating their homes. They made strategic walkaways going on. A lot of that home inventory was bought up by house flippers. Where are we sitting at now? Let's fast forward up to today. Where are we sitting right now on the market?
Well, it's always been about supply and demand. Last year in 2016, Maricopa County, which is where Phoenix is, saw 223 people a day move here.
Wow.
You believe that? 223 people a day. So, and the builders, their pipeline was destroyed. When the crash happened, they had to go out and reinvent themselves, and they found that it's not easy to build a pipeline again. So the builders are way behind what was considered the average before the crash, which was about 25,000 permits. Yeah. They're maybe doing 18,000 permits a year, and rents are very healthy. They keep going up, and our home prices are under a lot of pressure, especially under $400,000 or $500,000. So.
Yeah. You know what's interesting there when you say rents, and I want to talk about permits and stuff like that, but when you say rents, I remember when I sold my house, Mark, and you were part of this deal. I sold my house, not that side, but when I was looking for a place to rent before my next purchase, right, because I wasn't ready to purchase yet, I went into rent, and I tell you, you literally you couldn't find. If you walked into a house and you semi-liked it, you better commit before walking out of the house, right? Remember that? I mean,
yeah, better have your application in hand. Exactly. Well, I don't think in what we've seen, we saw after the crash, large funds come in like Blackstone and buy up everything in sight, and they wanted at the time an 8% cap, and they were doing that with cash with no debt service,
Right.
And they love that cash flow. They're not giving up on it. So I keep waiting for a time where all the hedge funds basically start to sell off these properties, but they're enjoying the returns. It's as the traders on Traders Nation know, it's all about returns, and it's hard to find good, consistent returns, and that's a rental.
And the rental will afford those investors that. And I know that, again, if you wanted to rent at that time, and I'm sure it's probably the same thing today, if you want it, you better have that application in hand. And they were charging like $75, $100 to run an application too. What a business. What a business, right, Mark? Right?
Well, I mean, typically speaking, you didn't get charged if you weren't going to get the property. I mean, people. I mean, if you got something in your credit report that you were, if somebody had a bad credit, they typically put that information out in front. Hey, is it going to hurt me if I had a bankruptcy 4 years ago or 3 years ago?
Yeah.
So I don't.
They did.
I didn't see that being a market center, but
sure. I can tell you, my credit's like over 800. They still charge me. All right, so then I want a refund if I can find their number, Mark. All right, so let's go, Mark. Let's go on.
Well, they turn you down because they heard about your Christmas party.
They weren't invited to it. That's the way they were upset about that. That's what it was all about, Mark. And you know how good those
they
are.
looked up on Facebook and they said, "Oh my gosh, look at this guy's Christmas party. We can't have him live in the house."
That's right. The place may get trashed, but that's not the case, right? All right. Anyways, hey, let's go.
Well, I mean, but the trends nationally. You asked about that. What we're seeing is the resurgence of the small town throughout the country. People are going to places that, not so much the big cities. They're avoiding the big mega centers, now going for smaller cities. If there's a trend, that seems to be it. People on the East Coast are heading down to Florida as a general rule, and Arizona, number one place they move here from is like Chicago, and believe it or not, the Californians who've always loved Arizona, seeming like they're flying over us to go to Austin, Texas. So
are they really going to Texas and New Mexico? Maybe
that's
New Mexico.
The trends.
Yeah. Okay. So that's kind of like a flight to quality, isn't it? Getting away from the city, the concrete of the city, and going to some of these urban areas.
I think so. I mean, I love to see it, the resurgence of the small little town, the cute small little town. I think so.
Yeah, all right. Mortgages.
But they're not going to stop coming to Phoenix because you can't shovel sunshine.
That's right. It's much easier than snow any day. And then maybe that's why we're getting some of those folks from Chicago. It could be. All right.
Oh, I mean, Chicago's always been the number one place for Phoenix. So
yeah, nice.
If you come from Chicago, you know all your neighbors because they moved before you.
But it's like Detroit. It's the last one out. Please turn off the lights, please. I got a friend of mine living out of Chicago. He's on the road right now. All right, so let's talk about mortgage loans. What are you finding? And I know this is not your business. You're not a lender, et cetera, but like this. But you're the guy in between the buyer and the lender, and you're in between all that. So you're in the mix of all that. So what are you seeing in regards to mortgage loans? Is it easier for folks to get a mortgage loan? Are they having to put more down? Or are we back to the old days where easy money is there to be had?
Yeah, no, we're back to the old days. Well, I'm sorry, you said the old days and easy money. I should have let you finish that statement. We're back to what I consider the old days, which is where all the verifications have to be made. There's no stated income. You have to prove your income. You have to have your tax returns or your W-2s or both, and bank statements for the last couple of months and so forth. A verification of employment. There's very little stated product out there. So if you don't have your financial house in order. And FICO scores, if it's gotten easier in any category, it's in FICO scores. You can buy a home with a 580 plus, which is pretty good. That's not perfect credit by no means. But when it comes to the documentation of a loan, it's back to where it was in the 80s.
Oh, okay. Solid paper.
It's tough.
Solid paper.
It's tough.
Well, and that's fine. I'm not against that at all. Solid paper is what's needed. You've got to show proof of your credit. You got to show proof of income. You got to show proof of employment. They don't want to take those risks anymore, right?
But I think the deal. Yeah. Well, what's interesting about risks.
Yeah.
Is what they figured out after the crash was that the non-conforming buyer, meaning Fannie and Freddie have what they call conforming loan limits, which are currently in Phoenix 425, and it's basically different all over the country, but it's basically where the medium loan for that place is.
Yeah.
And what the big borrowers or the big banks have figured out that if you could afford a home of, let's say, $1 million and put a loan on it, you're a much better risk.
Sure.
Than the guy under $400,000 because your income, we've learned, is much more stable. So rates for a $500,000 or $600,000 or $700,000 loan are typically less than that for a $200,000 or $300,000 loan. Now, does that surprise you?
No, it doesn't surprise me. We're out of time here today. All right, so Mark, where can we find you today? On the internet, Mark Antonowsky, Coldwell Baker.
Website is azreguy.com, or just give me a call on the cell. If you're thinking about moving, 602-469-1111.
All right, awesome. Hey, Mark, thanks for being with us today. Have a great day. We'll be right back.